Another day, another chance to talk about the mess over at Bed Bath & Beyond on, well, maybe several aisles. The company came out yesterday with yet another attempt to try to turn things around, saying it's going to shutter stores and lay off 20% of its staff in an attempt to cut costs. It's no surprise. That's where we find Sozzi's take today. Soz, you talked to some sources about the story.
Yeah, I'm just going to go for broke, Brad, here. I'm really just tired of Bed Bath & Beyond and what they're operating and what they're doing and what they're not doing. So a couple things here. Now that we've had about 12 hours or so to digest their performance yesterday with their new presentation, cash raise, et cetera. So here are some of my takeaways on day two coverage. First up, internal chaos. You know, I've talked to several people that are familiar with the company. There's just a lot of internal chaos at Bed Bath & Beyond as layoffs have started to roll out throughout the company. Now, keep in mind, as part of that plan that they came out with yesterday, they are laying off 20% of their workforce. That is huge. But again, a lot of chaos inside the company. Who reports to who goes where, what's the strategy, are we going to survive, do I get a paycheck next year? A lot of things going on inside of Bed Bath & Beyond. None of them are good. Next, unclear when the company will be free cash flow positive. Now, they came out with dreadful quarterly results yesterday, buried at the bottom of their press release. On that was just a 26%, I believe, a decline in same-store sales. You look at some of the analyst coverage here this morning, there is no good sense on when they start to go back to producing cash flow. And when you are a business, you have to produce cash. That's how you stay in business. Thing here on number three, is there a path to raise even more money in 2023? That is some of the chatter circulating around this morning on the street, that while this is a nice down payment that they can raise $500 million and sell 12 million shares, there's a lot of people now starting to look till next year, the first half of next year, when they might need more money. Next, execs don't seem to be understanding the meme stock investors, and frankly, they really don't give a damn. And it's, you look at the strategy in this team, and there really is none. You look at the communications folks on there operating as if it was 1995 and there was no internet. You have to embrace media. You have to embrace these retail investors. You may not agree with everything AMC CEO Adam Aron has done, but he has won a lot of supporters with investors that allows him time to try to turn the company around. So overall, folks, here's my take after all these considerations. For me, I'm Sears. I'm dusting off my coverage or my playbook that I use to cover the downfall of Sears, because I'm seeing all the signs play out this company: clueless management, internal chaos, no free cash flow, raising debt probably at high levels of interest rates in an environment that is slowing down and very challenging. None of this is good. And you're seeing the stock reaction down now close to 8%, in large part because I would say they did not like that reaction or those things that they outlined yesterday.
What we saw within Sears then in that playbook, they started to unwind the number of stores that they had. That was the only thing that the stock started to move on after a while.
And you know what that did? Your first thing, well, you're going to close 150 stores in Bed Bath's case, and you're going to lower your costs, you're going to can people. Well, what that essentially does, it removes Bed Bath & Beyond from the local community. The same things we saw from Sears and Kmart. So you further forget about Bed Bath & Beyond. Your store closes, you don't even shop online, you go to Target, you go to Walmart, you go to Costco for your home goods. Yeah. So not a good look here, not a good look.
Is it beyond the time for
Yes,
recovery? That's the big question here.